Ever hear friends talk about crypto, excitedly discussing the latest trends and opportunities, and feel like they're speaking another language, a secret code you just can't crack? Words like HODL, a rallying cry for long-term believers, FUD, fear, uncertainty and doubt spread by naysayers, and moonshot get tossed around, painting visions of overnight riches. And you're left nodding, lost in a sea of jargon. It's intimidating seeing all those charts in unfamiliar terms, but here's the truth. Everyone started out confused, even the so-called experts. The secret isn't genius or a finance degree, it's not about being born with some special talent, it's just learning the lingo, one word at a time, building your understanding piece by piece. Think of it like picking up a new video game, a vast world with its own rules and vocabulary, confusing at first, with all the controls and objectives, but it clicks with practice, and soon you're navigating it like a pro. This video is your cheat sheet, your guide to understanding the basics, to the most common crypto terms, the essential vocabulary you need to know, explained with simple analogies, making complex ideas easy to grasp. By the end, you won't just nod along politely pretending to understand, you'll join the conversation, confidently sharing your thoughts and ideas. Understanding the language is your first step to confidence in crypto, empowering you to make informed decisions. The wizards are just people who learn the vocabulary, they simply put in the time to learn. Before we dive into price swings and market madness, the roller coaster of the crypto market, let's get our dictionary straight, building a solid foundation of knowledge. With the right words, you can navigate this world, understand the nuances, and make smarter decisions, leading to greater success. Let's decode crypto together and unlock its potential. Let's start with HODL, hold on for dear life. It's one of the most fundamental concepts in crypto investing. Imagine planting a tree. You don't dig it up every day to see if the roots have grown. You wait, even through storms, trusting that it will grow stronger over time. That's HODLing, holding your crypto through the inevitable ups and downs, resisting the urge to sell during dips. It's about long-term belief in your investment. Next is FOMO, fear of missing out. It's the urge to buy when everyone else is hyped, driven by the anxiety of potentially missing out on big gains. Often right before a crash, it's a dangerous trap for inexperienced investors. FUD is fear, uncertainty, and doubt. Rumors or bad news meant to scare people into selling. It's a tactic often used to manipulate the market. Whales are big players who hold huge amounts of crypto. When they buy or sell, they make waves in the market, causing significant price fluctuations. If a whale dumps their coins, prices can crash, leading to substantial losses for other investors. If they buy, prices can soar, creating opportunities for quick profits. These terms aren't just jargon, they're clues to how people think and act in crypto, revealing the underlying psychology of the market. Understanding them helps you avoid panic moves and hype traps, allowing you to make more informed decisions. The crypto world is full of emotion-driven swings, but with these basics, you're already ahead of most beginners. You're equipped to navigate the market with greater awareness. Remember, patience beats panic. Don't let FOMO or FUD control your decisions. Base your choices on research and a well-thought-out strategy. Let's keep going and delve deeper into the world of cryptocurrency. Now let's decode some more crypto lingo. First up, ATF, all-time high. It's the highest price a coin's ever reached, like a personal best in sports, or reaching the summit of a challenging climb. It signifies a peak valuation, a moment of triumph for investors. Next, DCA or dollar cost averaging means investing a fixed amount regularly, no matter the price. It's a strategy to smooth out the impact of volatility. It's like buying avocados every week, rain or shine, whether they're on sale or not. You're averaging out your cost over time. To the moon is crypto speak for wild optimism, a rallying cry for those who believe in a coin's potential. It's a hope that prices will skyrocket, reaching unprecedented heights. But not every rocket launches. Sometimes things don't go as planned. Hype can crash just as fast, leaving investors disappointed. Shilling is when someone aggressively promotes a coin for personal gain, often without disclosing their own stake. Think of a pushy street vendor hyping a cheap watch, making exaggerated claims to lure you in. Influencers often shill coins they own, hoping to pump prices and then sell their holdings for a profit. Always be skeptical of hype and do your own research before investing in any cryptocurrency. These terms help you spot the signals and the traps in the often confusing world of crypto. Crypto is full of noise, but knowing the language helps you tune in to what matters and filter out the distractions. Stay sharp and don't get swept up by the crowd's enthusiasm without doing your own due diligence. Let's talk about volatility, a key characteristic of the crypto market. Crypto is famous for wild price swings, volatility. Imagine mountain weather, sunny one minute, stormy the next. That's crypto. Stocks move slowly. Crypto can jump or crash 20% in a day. Volatility attracts thrill seekers but can rattle beginners. Think of it as a roller coaster, slow climbs, sudden drops, sharp turns. If you expect a merry-go-round, you'll panic. But if you're ready for the ride, you'll handle it better. Volatility isn't good or bad. It's just how crypto works. Traders see opportunity. Long-term investors ignore the noise. The key is not to let fear drive your decisions. Know the ride and you'll keep your cool. Why is crypto so wild? First, it's a small, young market, like a tiny boat in a big ocean. One big trade can rock everything. Hype and speculation drive prices more than real-world use. A single tweet or rumor can send prices soaring or crashing. Regulation is still unclear. Every new law or government announcement shakes the market. The rules keep changing, so traders react fast, adding to the chaos. The technology is new and evolving. Bugs, hacks, or network issues can spook investors. It's like the early internet, exciting but unpredictable. As crypto matures, some of this chaos will fade, but for now, expect surprises. Understanding these forces helps you see past the panic. Don't get caught off guard by the next big swing. Stay informed, and you'll ride the waves, not get swamped. Let's wrap up. Now you know the lingo: HODL, FOMO, FUD, whales, ATF, DCA, and more. You understand that crypto's wild swings aren't random. They're driven by hype, uncertainty, and new tech. When prices drop, you'll see the small boat in a big ocean, not just a scary red number. This knowledge is your shield against panic. You can spot hype, ignore shills, and use smart strategies like DCA. You're no longer a confused outsider. You're an informed participant. The crypto world is still the Wild West, but you've got the map. Keep learning, do your own research, and don't let emotions rule your moves. No one can predict every peak and valley, but you can make smart choices. The goal is confidence, not perfection. Every expert started as a beginner. Welcome to the conversation.